Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 17th of March here in 2022. And what a day it was. We've ended the day up about 1% in our indexes, but the Russell, the small cap index, it's up the most, about 1.2% today. After the Fed, so we made it through. We survived the Federal Reserve. They raised rates, and by their announcement, they'll be raising rates 6 to 7 times here in 2022. That's about one rate hike, one liftoff per meeting, and there are 8 of them in 2022. So we will be looking forward to that, which includes TNX Treasury yields, and this is a 10-year note. Fed does not control the 10-year note, but they look at the overnight Fed funds rate, but that does trickle up the yield curve. So TNX is our 10-year Treasury note. Let's put that over on the weekly chart. So 30 represents 3.0, 20 represents 2.0, and 1 is 1.0, 10%, or 1%. That is the big picture, and yields are cooking. Yields are on the rise. But that also means, by the exact same reason, that rates and yield, Treasury yield and bond yield are up, the price is down. So the bonds continue downtrending. This is ZN, our 10-year Treasury note, all the way down to new 52-week lows. On the weekly chart, we see the last time that the note traded at this level, this is the continuous futures contract, was about 2019 in the middle. ZB, which is the 30-year bond, not quite as bearish, but nonetheless is making a little split decision here, but almost making those 52-week lows as well. Again, not seen since middle 2019. So that's a key thing, looking at the rates, yield, all that. And we can look at individual sectors in the market. Everything was green today. That wasn't the case when we started the market, but the market certainly closed strong. But the weakest sector in today's session was technology, and that is XLK. And that did close just about. XLP is staples, but the other weak performer is utilities. But in the morning session, these were weak and negative, but they closed up the day positive. So that is XLK, which is a technology ETF. The broader technology index, or the ETF, is QQQ. So that is playing up off that level. I often do the videos in terms of index futures levels, but let's focus a little bit on those ETFs. So just quick update. The line in the sand, weekly chart right here, failure to hold is going to dip this over the cliff, but it held. It held at least middle of March, and that is 13,000 on the Nasdaq. On the S&P, that number, just quick reference, is about 4,100, or just about 42. Again, failure to hold, failure to bounce, opens the door to a much lower sell-off. Same in the Dow and the Russell. The Russell is a small cap index, and that level is about 1,900. Now, as promised, let's look at our ETF levels. This is the SPY, or SPY, Spider ETF. Key pivot for it is between 410 and about 420. We'll call that 415. An edge of the cliff logic, downtrend continuation on a break under that 410 level. That's what the market has, at least as a critical shelf, but it hasn't broken yet. And that same logic is in the QQQ, our tradable ETF, or tradable fund for the Nasdaq. And that will be, you can see the implied volatility in the near-term futures, but that's going to be pushing off the 320 level. So ETFs are not priced identically to their corresponding index, but there is where you would trade options, spreads, sell premium, or any particular other type of in-out spread, inflection point spread, or whatever you're comfortable with on the option standpoint of the option market, and the time remaining, duration, etc. Or hedging off a broader portfolio like your retirement account in terms of protection of additional downside risk. But the Qs are 320, and other levels would be the DIA, that's the diamonds, that's corresponding to the Dow mini futures, and that key inflection point, just keeping it simple, about 325. And that is a big support shelf that drops the diamonds down to about 300 if these key support levels shatter. Or the other analogy, falling off a cliff. And we'll finally look at the IWM and that inflection point or that critical pivot about 190 per share in the index. And on the weekly chart, we see the Russell has been a little bit more range bound, consolidated, or has spent more time going sideways than going straight up or straight down. And that's not necessarily true when looking at the Nasdaq, which is just about straight up. So the small cap indices, the Russell, they actually have underperformed the broader market. And that is what we're watching in the index movement. You can always take a look at the end of day here at the Market Watch tab, visualize, and see exactly which index or what products, mainly which sectors. Now they're all green, but look at the financials. Financials were some of the weakest of the Russell's components in today's session. But there's the Nasdaq, red. These were actually red. The monsters of tech were actually red in the morning session, but did close the day bullishly. And there's the broader S&P 500. We did see energy strength, and that is, time permitting, we can take a look at crude oil, which was up 9% today, about $8 or so. Gold did as well. And one thing to look at, we'll pull a perspective here to see that a bounce, nothing is ever guaranteed in the market, but from an overbought or oversold condition, crude has bounced up off that 95 level. Gold, similarly, it had a similar overshoot to the upside, yank back to the downside, and then a bounce up off that 1900 level. So these are key pivots to watch. If we look at those short-term volume profiles, which is my favorite, we are seeing crude on a volatile burst to the upside, all the way back down, overshooting to the downside, just like it overshot to the upside, and now is pulling back inside of the profile. Just to underscore how big these moves are, this one-day move from underneath the profile back inside, or at least underneath a critical support level, coming back in, just think mean reversion, that's 9%. That's a big move in crude oil. Gold did the similar play, but not as much on the percent basis, 1.7. And a little bit else talking about the bond market, that's TLT. And finishing up on the big picture, again, these markets are more down than sideways, but nonetheless, we'll watch those and how the bigger picture plays out, the Federal Reserve, inflation, and all the other headlines that are hitting the market all at once. Let's finish with a couple of stock scans. So which stocks in the S&P 500 are outperforming? So we had an up day in the market today, a little bit of a surprising up day after the Fed, but up day nonetheless. Which stocks outperformed? Which stocks were hitting new highs? Berkshire Hathaway. That's Berkshire B. And that had earnings not too long ago, and I sort these by market cap. So we'll pull these over here and just take a look at some of them. Others would include AbbVie Labs, Eli Lilly, Bristol Myers Squibb. There's John Deere sneaking back into that list. Anthem, Regeneron, and others. Dollar Tree makes the list again. And quick note, those are the stocks that made 52-week highs in an up day. Were there any stocks that made 52-week lows? Surprisingly, and this surprised me, there wasn't. There was no stock in the S&P 500, as that scan completes, double, triple check, that made new 52-week lows. Very interesting to me. So we'll pull these charts, just a quick look on the daily chart on the left, and we'll put the weekly chart on the right. And a few names pop out. Berkshire Hathaway, which is a strong stock getting stronger. AbbVie Labs, also a strong stock getting stronger. It's made this list a few times. And really any time that a stock closes or makes a 52-week high, it will show up on this simple scan. And each time that it did so, it's going to pull up on the list, and the thought process, the logic, the trade setup, the play would be expecting continuity. We don't want to buy an all-time high. We'd rather buy with risk control in-out spreads or vertical spreads or other type of bullish plays on a pullback, not at an all-time high. That's true in Berkshire Hathaway as well, but also Eli Lilly. And that one is strong on the weekly chart, but not quite as bullish on the daily. But that weekly chart does overrule. It shows the broader picture and the multi-year trend. Bristol Myers Squibb, although it did show up, but this is where scanning can have its limitations. It is making a new 52-week high, but that's not convincing. I would not look to play bullishly. In fact, I might even look to be more on the bear side or the fade or the sell side from the top of that long-term weekly channel. John Deere has made it back into the list, Anthem, Regeneron, and a few others, including Dollar Tree, which is a retail name. But all we're doing here is pinpointing which stocks are outperforming the market, and the idea is that which is strong and making higher highs, especially if confirmed by the weekly chart, like Berkshire Hathaway, it does have better odds to keep making those highs, or that which is strong does tend to get a little bit stronger. There are plenty of stocks that are going down, but in terms of the scan, none of them made the list in today's session. That could be very different tomorrow, Friday. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for March 17th, 2022.